Assalamualaikum warahmatullahi wabarakatuh. From your insurance law class, we are Siti Ania Haji Usman and Siti Fairoza Alonto. In this presentation, we will cover casualty and suretyship. Now, the main contents of this presentation will be casualty insurance and suretyship. Casualty insurance will be discussed by yours truly, Siti Ania Jusman, and I will be tackling about what casualty insurance is, what it is not, what are its forms according to the insurance code, its coverage and divisions, and etc. On the other hand, in suretyship, that will be discussed by co-reporter. She will define what suretyship is and distinguish it from guarantee and insurance. You will also learn what are surety bond, types of surety bonds, nature of liability of surety, and many more. So please stay tuned. To begin with, let us define casualty insurance under Section 178. Casualty insurance is an insurance covering a loss, liability arising from accident or mishap, excluding certain types of loss. So, casualty insurance means that the policy includes liability coverage to help protect you if you are found legally responsible for an accident that causes injuries to another person or damage to another person's belongings. From that definition, we learn that it is not only about our liabilities, but it also covers non-life and health insurance. Now, what casualty insurance is not? What it does not cover? Insurance covering loss or liabilities arising from fire, marine, and others. Now, how about the coverage of casualty insurance? Casualty insurance includes the following. First, employer's liability insurance, in which the risk insured against is the liability of the assured to make compensation or pay damages for an accident, injury, or death occurring to a servant or other employee in the course of his employment under statutes imposing such liability on employers. Second, motor vehicle liability insurance, which is a contract of insurance against passenger and third-party liability for death or bodily injuries and damage to property arising from motor vehicle accident. Third, plate glass insurance, which is an insurance against loss from accidental breaking of plate glass windows, doors, showcases, and etc. Next is burglary and theft insurance, which is an insurance against loss of property by the depredation of burglars and thieves. Next is personal accident insurance, which is a form of insurance which undertakes to indemnify the assured against expense, loss of time, and suffering resulting from accidents causing him physical injury, usually by payment at a fixed rate per week while the consequent disability lasts, and sometimes including the payment of a fixed sum to his heirs in case of his death by accident within the term of the policy. The last one is health insurance, which is an indemnity to persons for expense and loss of time occasioned by disease. We have to take note that health and accident insurance are either covered under life insurance section 180 of this code, or casualty insurance under section 174. And of course, last but not last, other substantially similar kinds of insurance. Now we have two divisions of casualty insurance: the accident or health insurance and third-party liability insurance. Accident or health insurance are insurance against specified perils which may affect the person and/or property of the insured, while third-party liability insurance is insurance against specified perils which may give rise to liability on the part of the insured of claims for injury or damage to property of others. Example of accident or health insurance are plate glass insurance, burglary and theft insurance, personal accident and health insurance as written by non-life companies. Example of third-party liability insurance are employer's liability insurance, workmen's compensation insurance, public liability insurance, and motor vehicle liability insurance. Now we have rules on third-party liability insurance. First rule is that the insurable interest is based on the interest of the insured in the safety of the persons and their property who may maintain an action against him in case of their injury or destruction, respectively. Second rule, in a third-party liability insurance contract, the insurer assumes the obligation by paying the injured third party to whom the insured is liable. Prior payment by the insured to the injured third person is not necessary in order that the obligation of the insurer may arise. Take note that the moment the insured becomes liable to third person, the insured acquires an interest in the insurance contract which may be garnished like any other credit. Now, the third rule, in burglary, robbery, and theft insurance, the opportunity to defraud the insurer is so great that insurers have found it necessary to fill up the policies with many restrictions designed to reduce the hazard. The purpose of the exception is to guard against liability should theft be committed by one having unrestricted access to the property. The fourth rule is the right of the person injured to sue the insurer of the party at fault depends on whether the contract of insurance is intended to benefit third persons also or only the insured. However, it depends. That is, the situation depends if the contract provides for first, indemnity against third-party liability. If the contract provides for indemnity against third-party liability, the third persons to whom the insured is liable can sue directly the insurer upon the occurrence of the injury or event upon which the liability depends. Now, the purpose of this is to protect the injured person against the insolvency of the insured who causes such injury and to give him a certain beneficial interest in the proceeds of the policy. Now, if the contract provides for indemnity against actual loss or payment, No? The third person cannot proceed against the insurer. The contract being solely to reimburse the insured for liability actually discharged, no? It actually discharged by him through payment to third persons. Said third persons recurs being thus limited to the insured alone. Prior payment by the insured is necessary to give rise to the obligation of the insured. Okay, so now let us move on to the rules on accident resulting to death or injury. The general rule is that for death or injury to be covered by the policy, such should not be the natural or probable result of the insured's voluntary act, or if something unforeseen occurs in the doing of the act which produces the injury may result to death. Now this also includes incidents that signify a disregard of one's life. For example, suicide, those voluntary exposure to unknown danger is generally held. That instances generally held to negate the accidental character of whatever followed from the known danger. So let's take a look of this formula. If the cause of action of the insured results to death or injury by accident, there will be a recovery on the policy. On the other hand, if the cause of action of the insured is intentional, like those of suicide, there will be no recovery on the policy. Okay, so let us have a little recap of our discussion. Casualty insurance, again, protects us when we are liable for someone getting hurt, or when we are liable to the belongings getting damaged. The circumstances in which we are covered depend on the specifics of our policy. For example, when you accidentally drove into your neighbor's fence, if you have a car insurance policy, your car insurance policy might pay to repair your neighbor's fence after you drove on it. Okay, so just as you purchase property insurance, bumili ka ng property insurance because you want to protect yourself from financial loss. So parehas din, like if you purchase liability insurance or casualty insurance because you protect yourself from financial loss if you become legally liable for injury to another, or if you become legally liable for the damage to property of another. Now we have to take note that to be legally liable, one must have demonstrated negligence. So if negligence results in harm to another, the offering party is liable for resulting damages. The offending party is liable for resulting damages. So now question. Lawrence, a boxer, is a holder of an accident insurance policy. In a boxing match, he died after being knocked out by the opponent. Can his father, who is a beneficiary under said insurance policy, successfully claim indemnity from the insurance company? The answer is yes. No? Clearly, the proximate cause of the death was the boxing contest. So, death sustained in a boxing contest is an accident. So, therefore, the father of Lawrence who is a beneficiary of the policy, can successfully claim indemnity from the insurance company. Now, another question. While from the 1996 bar, okay, here we go. The question is that while driving his car along EDSA, Cesar sideswiped Roberto, causing injuries to the latter. Roberto sued Cesar and the third-party liability insurer for damages and/or insurance proceeds. The insurance company moved to dismiss the complaint, contending that the liability of Cesar has not yet been determined with finality. Is the contention of the insurer correct? The answer is no. The contention of the insurer is not correct. There is no need to wait for the decision of the court determining Cesar's liability with finality before the third-party liability insurer could be sued. The incurrence of the injury to Roberto immediately gave rise to the liability of the insurer under its policy, where an insurance policy insures directly against liability. The insurer's liability accrues immediately upon the occurrence of the injury or event upon which the liability depends. So that ends the part 1 of our report about casualty insurance. The next topic would be discussed by my partner, which is all about the suretyship. That would be all. Assalamualaikum warahmatullahi wabarakatuh.